Exciting now.
I pity the fool.
The shape charge indicates that they are technically proficient.
Read Sun Tzu, The Art of War. Every battle is won before it's ever fought. Think about it.
What you're about to hear is going to sound off the beaten path, but while we go over this data, while we go over this concepts, this fundamental breakdown of the crypto market and how it has been directly applying to Kaspa's on-chain data, keep in mind, 90% of the traders in crypto are going to lose their money. The winners are going to do exceptionally well. And it's off of the losers that the winners are harvesting this cash. Social media often acts as a confirmation bias tunnel. And the greatest of all social media creators confirm exactly what the masses are thinking. You just bought a coin. First thing you do, you go on social media, you find a video about it. This guy likes your coin.
Exciting now.
This is great. This is the guy I was looking for. He knows everything. He's a genius. You subscribe, you like to that video. What we've been doing on this channel for the past 500 days is challenging the way that you're trading crypto, bringing entire new concepts to the stage. Keep those factors in mind as we start diving into this, because frankly, the flat out truth of this recent decline on Kaspa was actually only strengthening it. And we're going to prove that right now, once we connect it all to monetary policy. First thing we've got to do, we've invited everybody in here. We've got the Kaspa Maxis. We've got the Jesse AI. This guy's saying up the microphone, copy that. We got the Jesse AI crew in here. And we've also got the Fudsters. Just to help these guys out, just to make sure everybody's on the page, we're going to open up with this slice of humble pie. And this applies to a lot of these content creators gunning out because they made a couple bucks during the last crypto market. They think they're now masters of the crypto universe. And we're going to prove to you in a second who the absolute best trader across the market is. And it's not just me. It's the systems and operating procedures that we've been administering have been yielding not just great gainers. There's some talented traders out there, like let's say Crypto John, for example. He held his Kaspa. He didn't get worried. He understands the basic concept. You buy and hold, you wait for the bull run. He didn't get scared off like some of these guys who are a little overconfident right now, and they're on the peak of Mount Stupid. This is actually a scientific study. And then what happens? They sell their Kaspa down here, trade it in for something else, deposition out of it, and then all of a sudden they realize they didn't understand the monetary policy that we're about to break down in this video that showcases the true masterminds of the market, the guys who have their own reports on Kaspa, the BlackRocks, the State Street. These guys have been not only loading their bags, but strengthening Kaspa's ecosystem this entire sell-off, and it's all connected directly to monetary policy. So who am I to be talking all this smack? Well, we've been the guys that have been getting it right over and over again, not just with winning trades, with literally the best possible trades that you can imagine. And we're not talking about buying Kaspa 500 days ago. The majority of you guys probably just got into the market 120, 90 days ago, right? Bitcoin starts ripping. You're like, dude, I'm getting into crypto. Forget about stocks, poker. You're going to put your cash down where it counts. We recognize, because of this monetary policy concept we're about to explain in detail and how it's affecting Kaspa right now, within the next 6 days, there's going to be a monster catalyst that can affect Kaspa and send it ripping to the upside. Let's take this prior x-axis downtrend, clone it. Looks similar. We're right about ready to make another leg up, and this is paralleling exactly with monetary policy. So this entire time in our VIP group, everybody was buying Kaspa. They were like, we got to load up on KRC20. It's time to go right now. That poor kid, Archie type, I sent him a DM. He kept saying, I just bought 10,000 more Kaspa. I'm going to be a millionaire. Everybody's like, yeah, me too. And we knew, undoubtedly, this is a short sale. And we're going to break down why in a moment. And it goes way beyond the fact that, yeah, some of the KRC20 meme coins, they got a bunch of Kaspa and they're directly selling it hand over fist. That's just the tip of the iceberg, because what's most important and what we focus on in this group is tracking these market maker investment banking class. And obviously they have their hands wrapped around Kaspa. Notice these insanely large green candles happening again and again. What's the catalyst? FOMC data. That's what these guys need in order to make a move. They don't guess. They bet on sure things. And we're going to show you the data that they're looking at, how to incorporate it, why it caused the sell-off, why that actually only strengthened Kaspa immensely by showing you other examples of the exact same sell-off for the exact same concept. The KRC20 is now developing. So these guys aren't buying Kaspa. They're buying Trader Joe. They're building the ecosystem. They're investing off-chain, just like retail was buying all of the meme coins. We can see that with KII. They're doing the KII Academy right now, just recently, all correlating and underlining this concept for how we got the short sale. Now, there is a touch of technical analysis here, which allowed us to mark the exact day and exact dollar that this was going to bounce off of, but this is about fundamentals. Okay, anybody can do an error or make a bad call out. We're not trying to hold these guys down for that. It's the fact that fundamentally, you're looking at the wrong stuff. Monetary policy and FOMC meetings have probably never even came out of a lot of content creators' mouths, and they are crucial for crypto. It's cryptocurrency, money. Satoshi wove this all into Bitcoin, which is the granddaddy spearhead of all crypto. We'll break that down in a minute. You can see, undeniably, these FOMC meetings are drastically affecting Kaspa, including the one on September 18th when we had to short sell. So big deal. We shorted Kaspa and got lucky. So what? Well, at the exact same time, we also recognized Moonwell was about to start rocketing to the upside, and we had been planning this trade since over here, getting ready for rate cuts. We were saying, yo, once rate cuts start, Moonwell is going to absolutely rip, and it's all because of monetary policy. We're about to break down the dot plots and get into this huge catalyst on December 6th. We start planning to buy right here before the FOMC meeting, get everybody loaded up right here in VIP, massive rip, even marked the top. And then just recently, more FOMC monetary policy data came out. So we gave everybody an 11-hour heads up. Hey, if you want a discount on Moonwell, this isn't going to be a rocket ship, but it's going to start beefing price up. Now's the time to jump in. And this December 6th catalyst will have a similar effect for Kaspa. Not ready to completely rocket ship, but it's starting to bump up, getting closer to that huge move, which is also all based in monetary policy. Okay, so we got a lucky call out there. That was the best swing trade, by the way. Beats any meme coin. It was just crushing, right? You're getting in at 2, going up to 10. It's over. Whoop-de-doo. This just came out last week. I saw you guys in the chat. You're like, where were you, Jesse? 1 out of 20 subscribers is in VIP. So inside VIP, we were dropping this. Yo, this is the Spectral buy plan. We're getting the full 1-day stochastics, leaning a bit into some technical analysis here. Look what happened on Spectral. Rocketed to the upside. And of course, this all started where? September 18th. They cut rates. This is a 24-point gem. It's a top swing trade, just like Moonwell, crushing the meme coins. So that means we have a full detailed report on it. This is the 24-point report system blank. We've got 7 of these fully fleshed out on different projects, the majority of them in AI. We've got another one for desync. Getting everybody in on desync down here. And I remember the guys in Discord were like, dude, we got to get this desync at 15. Using hindsight, I wish I would have bought some of this desync. This is one that I didn't go for that is a 24-point gem. And it absolutely ripped. Look at that. So we're loading up here. This is a bit of technical analysis combined with the fundamentals. We get the rate cuts, and now we get, boom, this insane rip to the upside from 15 to 44. DEAI, this is another 24-point gem. This is getting ready to have massive upside as we speak. The concepts that we're utilizing are crushing whatever you guys are doing, whatever your favorite content creators are or whatever you're doing. You can't beat these swing trades because they're actually the best ones in the market. That being said, how does this affect Kaspa? The audio is low. Okay. We've got audio now. We're good to go now. Testing. We got the audio now. We should be up and running with this sound. Can I get a playback? Now we're good. Okay, now we're good. This is going to be one of those very special live streams. You guys are going to get this data, and then we'll upload it. Hopefully, we'll just cut everybody into the 20-minute zone. From the top, what has been going on in the Kaspa community, you guys? This is the greatest technological advancement of all time. This is the new Bitcoin 2.0. But because there was a group of young, very enthusiastic traders who jumped in and they started giving everybody just frankly bad trading advice, we've got a whole new round of investors that are hopping in and they're saying, dude, Kaspa's dead, it's going down. When in fact, once we look closer at the monetary policy, what's going on behind the scenes, all that's been happening is Kaspa's been getting strengthened. It's just been getting stronger. And yes, of course, it's the Peach Fuzz Mafia. They're the ones behind this downside. Well, we lost our live stream, the majority of our audience, but we're going to roll with this anyway. All right. Everybody's back on board now, and we're ready to get down to the brass tacks. Whether you guys are hardcore Kaspa maxis or you're somebody that just got caught up in the FUD and you're still on the sidelines, wait until you soak this in. You see, the majority of social media, a really good creator will connect with your confirmation bias. You're interested in buying a coin. You start looking it up on social media. All of a sudden, there you go. Yo, this guy likes my coin. This guy knows what's up. I'm going to like, subscribe, check out his stuff. What we've been doing for the past 500 days is challenging the way that everybody thinks, pushing the boundaries and expanding what commonplace tactics are into FOMC monetary policy and really opening people's eyes. And we're going to underline how effective all of these strategies are in a minute. We got to give everybody who's a newcomer who thinks they realize, oh, Kaspa's our dead coin, it's going down. And a shout out to the creators who just dollar cost average out of Kaspa, or in the worst case scenario, like that poor kid Archetype, he kept buying Kaspa all the way up. All the way up on the KRC20. And I remember his post, he was like, I got 10,000 Kaspa today, I'm going to be a millionaire. And then he just dumped it. This is a scientific study, has nothing to do with crypto. It's called the Dunning-Kruger effect. You'll get to a point where you think you've got everything figured out. And then that's when you suddenly sell your Kaspa. You turn around and realize all that was happening was it was strengthening the entire project, as we're going to show with parallels to other blockchain and exact monetary policy connections. All that was going on is they're getting ahead of schedule. The investment banking class, your BlackRocks, your State Street, these guys, instead of buying into on-chain, what have they been doing recently? Growing the Kaspa ecosystem. The KII has been funding tons of growth. Right now, instead of just buying into Kaspa on-chain, you know what they're getting into? They're getting into the Trader Joe's. Here's a perfect example of this from the last cycle. You get your massive run up from the bond market, from monetary policy on AVAX, and then you get this huge sell-off. Do you know what was happening all throughout this low side? The big dogs no longer buying AVAX, they flip around and they start building Trader Joe's. They start building the entire ecosystem. This is what the KRC20 did. Was it suddenly gave the institutional level investors, the guys who are really moving the Kaspa needle all the time, as we can see on this Kaspa FOMC chart, boom, ripped to the upside. This is not from retail. This is absolutely institutional levels. And even on this one, they created the Binance Gamma support level at 10, opening futures on Binance, protecting Marathon Digital's seed investments and prior seed investments back here. There was a huge rip in April. In my opinion, that's when Marathon Digital decided they were going to pull the trigger and they started loading the bags. There was like a huge mountain right there. This is when a lot of people who were in the market 500 days ago got to scoop up Kaspa. But what about for guys who just jumped in here? You're like, dude, I've been in the market for 400 days. Kaspa hasn't been doing too much. It's about to kick off. But, I mean, whoop-de-doo. So you shorted Kaspa. You got a good eye for the Kaspa chart. You realized it was going to fall all the way down. And we'll get into the technicals on why that happened later.
The shape charge indicates that they are technically
using the
proficient.
exact same monetary policy. We had been eyeballing Moonwell since June, waiting for the Fed to cut rates. Once they cut rates, we're going to start scooping up Moonwell on the low. This isn't a good trade. This isn't a profitable trade. This is one of the stone cold best trades you could have possibly made. And it's all because of this understanding of monetary policy. We're getting everybody in mainly here. Identifying the top of 10. And then look at this recent little bump. This is also monetary policy. And this stuff, very helpful right now while we're loading bags. When it's time to flip the coin and sell, this will separate the men from the boys. This will separate the Lamborghini drivers from the men who now have an empire of real estate because of their crypto investment. You got to be tuned into this monetary policy stuff. It's next level. Next level. Okay, so you got a good DeFi pick. Just last week, I saw you guys in the comments earlier. You were saying, Jesse, where were you for the past week? We were posting in VIP. 1 out of every 20 subscribers is a VIP member. It's just a better way to digest this. Not only do you get these trading plans ahead of time, we can get information out instantly and fast. Like you guys remember the Bank of Japan carry trade? We were able to identify that head and shoulder pattern, give everybody a heads up in VIP. So this is Spectral. This is a 24-point gem project. That means that we have a 9-page report filed on it. It's a top swing trade right now and off of rate cuts, because as the rates get lower, this is super bullish for projects like Spectral. Let's get the TA out of the way so we can get to the brass tacks here. This is September 18th. You see that? We did also have buy alerts here for $5.20 and under. I scooped up a huge bag at $4.85. That's round number talk, part of that $10 projection on Moonwell. Look at this upside just from here. Boink. This is one of the best swing trades you can get into today. And this project has massive potential to become a runaway freight train, the next Tau. It's already at $250,000 market cap. That's a lot of candle for $250,000 market cap. You usually see something that was like 30 million, 40 million, really get some upside like that. So this is a big dog that's moving. And as we know, with any technical analysis, it's just showing market psychology. Whatever comes out on top of this will be bullish because it's a flagpole. So this is just a pause until further upside. DEAI, this is a great example of the prerequisite to technical analysis. Downside, this broadening wedge broke downside. Upside, this broadening wedge breaking to the upside. But we're here specifically to talk about monetary policy. Monetary policy is important. It's exactly what skewed this crash on Kaspa and the market on August 1st. You guys remember that? So that came out of nowhere. Gareth Soloway, who's like the OG of all traders, he didn't even see that coming. It was really out of nowhere. This is the only heads up we were able to get to this. Set a stop loss on the leverage trades that we got in way down on the low, 12.5, 13.3, and they survived anyway. Those leverage trades were so low, this wick didn't even bust them. So we ended up closing those out around here before we jumped into the short trades. Fundamentals, though, are what we're paying attention to. And the fundamentals are just so underrated. It's the fundamentals that have been driving the altcoins downward for an extended period of time. And then just recently, Solana, AVAX, all of these projects started ripping to the upside, and it's all based on fundamentals. This is all matching the total 3 chart. There's this giant falling wedge, as we can see on any total 3 right here. See this giant falling wedge? It's the exact same thing on Render, Solana, Bitcoin, and AVAX. So we're getting these buy alerts like Solana at 130, all based on monetary policy. This is exactly what we're about to connect Kaspa to. What was really going on behind the scenes? We can see the interest, Kaspa being fair launch. It's not the exchanges that put up the liquidity. Coinbase and Binance themselves will not be holding all that Kaspa when those listings take place. Speaking of which, we have the screenshots from Twitter showing that Binance is about to do the listing. Right here. Hinting even closer. This promotion runs from November 28th to February 1st, roughly. And this is going to coincide with the quantitative tightening policy we're about to check up on, because we haven't even started touching base on these fundamental driving factors yet. And this is when we're going to get into the really nerdy stuff, the kind of stuff that you need to go to college for in order to become truly good at. Instead of investing in Kaspa, once KRC20 opened up, it became the same scenario as AVAX after the run-up from the bond market. Another way to look at that, instead of interest rate cuts, is the quantitative easing cycle. These are some screenshots of this. So the FOMC is playing Monopoly. They're printing money left and right. They're the banker, and they work hand in hand with BlackRock. What they did right here, this is prior bull run. This is going to give us a lot of information. Look at this date, February 26th. This massive spike up here. An easy way to look at this is by monitoring the rate cuts. We've all heard that. A deeper level is quantitative easing and quantitative tightening. Okay, this is a twofold thing. Just to go full spectrum, we'll bring up the 1-year Treasury on Fred. This is the 2-year, close enough. It's basically the same thing. So what we can see right here is February 20th. It's that exact same date. The Fed starts cutting rates, and more importantly, they start buying bonds off BlackRock, because in this monopoly game they're playing called fiat, they're putting liquidity on the street to create jobs, stimulate the economy, but at the same time, they have to watch out for inflation. Otherwise, it will go through the roof and cause a disaster. And this is set for self-destruction. What can help speed it up are a strong economy in the United States that can slow it down. and give the Fed more room to stimulate the economy. So right now, and this is really important, notice how this arc was very steep and then it starts to flatten out. It's going to completely plateau. And we'll get into this data as we review the FOMC minutes, which just came out during this Moonwell call out. The entire reason that we made this particular, it wasn't like it was going to rocket, but we were like, if you want Moonwell at a discount, get it. Get it right now inside VIP, because they're about to release FOMC minutes. Now, in here, this is just an official statement of what the Fed said that they are going to do. And we're going to break down their dot plot as well. In this document, it says right here, they're going to cut rates again in December. Inside the meeting, inside the minutes, it's just right there. Boom. We're cutting rates in December. So that extremely bullish and starts spurring investments from the investment banking class. Yes. Okay. We've got part of the dot plot here. This is all going to be updated in December. And so that's going to be huge. So they update this quarterly. Zooming in a bit. This is the big catalyst that's about to take place. Jobs data coming down. This is how all this works. It's all interwoven parts. We just understand and got everybody up to speed on how when they cut rates, like on February 20th, and they start buying bonds off BlackRock, guess what happens? That's when everything started rocketing last cycle. You see that? That's February 20th. When we jump over to the Bitcoin chart, it's the same exact thing. That's when everything starts ripping to the upside, exactly like on AVAX, February 20th. And it's not just crypto. Tesla, GameStop, it's all rocketing right then, right on February 20th. AVAX jumped up right around then. And then with this injection of liquidity, now they start developing the ecosystem, taking money from investing directly on chain and into other side projects. That's what just happened with Kaspa. You see what's going on? The big dogs, the guys who shaped this whole thing. Retail is a passenger in the car. We are not driving this at all. People are like, oh, it was Sam Bankman-Fried, he wrecked the bull run. It was completely, and this will play into part with selling, 1,000,000% the central banks and the government, because they did the exact opposite here. They just flipped the switch, started raising rates, and then turned around and started quantitative tightening. And there's still quantitative tightening right now. Here's the massive driver for Kaspa. That's going to be even bigger than the jobs data that we're about to break down. And this is going to help you guys big time when it comes time to sell, because what we're going to have to watch during the bull market, right? The Fed's maybe going to even do quantitative easing, which means that this chart will spike up again, putting massive cash on the street, and those are just going to go directly into crypto and stocks, creating a supersonic bull run to the fifth dimension. And when that's going down, what the Fed will be monitoring at that point in the time is they'll be looking at inflation. They'll be making sure that they're not ruining the fiat system completely. That's not what they're looking at right now. What they're looking at currently is jobs data. Red pill in the house. Exceptional call out with the 3x leverage on spec. Well done. Yes, the VIP, standard operating procedures, which if you guys want to hang tough and stay through to the end, we'll do some technical analysis. This stuff will blow your mind. It's Witchcraft 2.0, the callouts that we're able to do just using the repeating trendline system. But more importantly, most of us don't want to do technical analysis. There's like left brain people and right brain people. TA isn't for everybody. I get that. You don't need to. So meanwhile, with those Kaspa short sales, we have a huge technical analysis backing them, which gave us the day and the dollar. But guess what? Could have done it with no chart. No chart at all. We could have told you, boom, right there, it's going to go down to the date. The price would have been more varied without TA. But we would have known the date. Start shorting Kaspa now. Kaspa's going to hit its bottom now. And it overextended a bit because of the effectiveness of KRC20. That was sick. So we had the AVAX swing trades. And because of AVAX's success, let's zoom in a little bit more. So this falling wedge, and just basic technical analysis, one of the printouts that you get. So you guys have a trading journal. You should start one. And when you join group, you get one. You get like 100-page trading journal. It's pretty good value. And of course, we have all the technical analysis with their exact setups. This is the falling wedge. You can print this out. It's got a 90% chance of breaking to the upside statistically, and it'll see an upside of 150 to 250%. So I just keep this in my desk, and I can just look at it when I see the pattern, and I know where we're at. So this is showing us way more upside. And yes, we're talking about new upside high, but see how this pause right here and then the additional leg up? So we were able to get a late entry on render with that at 777 and under, right around here, and then it was kind of dipping down. The majority, almost 99% of our projects call outs aren't, oh, you got to press the button instantly. It's like, this is good for a week, like whenever you're ready. Or like with Moonwell, we were waiting for a particular signal. Not on this one, but when we really snagged it hard was at 30 cents and we used our stochastics. Yeah. So it had jumped all the way up to like here, but we were able to catch it on the pullback to 30 using some indicators that are very helpful. And they were also part of that spectral call out. Part of the way that we knew spectral was at a low was these indicators. It's like an RSI type of thing. It's a bit more than RSI, actually. It's like the RSI that you actually want to use. So just like on Moonwell, see that 1 day swing low? That was Moonwell at 3 cents. This is spectral here, and we've also used that on Kaspa multiple times. So the minutes just came out, but what's about to hit is jobs data. And this is the coup d'etat. This is what we are hoping the prior political administration was able to somehow, by creating a lot of government jobs, by somehow infiltrating the groups that are harvesting the data because they can't get to the Fed themselves. Hopefully, this jobs data is looking weaker than they're thinking right now, because as soon as they need to create jobs, it's on. They will cut rates harder. They will stimulate the economy more. And this means we're going to make more money. Because it's all that monopoly game. They've got to balance everything. And it's directly connected to crypto. This is Satoshi's secret. When he designed Bitcoin, he created a financial sponge. Every time Bitcoin halves, the rate cut cycle happens. So this was the prior rate cut cycle. It was 4 years ago. And then here is the halving. Fast forward this time, any of you who follow Wall Street or follow FOMC have probably heard Powell has delayed the rate cuts. They're saying he was late. So the halving went first this time, and then the rate cuts just happened. But they work hand in hand by design. This is called global liquidity. It's a cycle of money, that monopoly game that they're playing. This isn't even an article that's about crypto. This is just about economics. If you were to go to college to learn this stuff, this is a 5-year wave. And you can see this prior top, that was the last bull market. And right now we're just starting to edge up as they start taking all of that liquidity fiat fake money from the monopoly bank, which they're holding in quantitative tightening with the bond markets. And now they're sticking it back in BlackRock's hands, and they're saying, have a field day. And of course, they need to fight inflation. That's why cryptocurrency is such a handy tool. Moonwell's a direct competitor to this because it offers yield with staking. So the jobs data will be released on December 6th. And the market is already positioned. So in the scenario where it comes out and there's some either lagging indicators or direct indicators showing it's bad, one of them will be the wage growth tracker. This is a lagging indicator. What they're really going to look at is like the employment rate, which we can see this chart of right here. And it's all relatively on track. What we want to see is a dip in this. We want to see some downside. And you can look through this. This is very accountant, above the shoulders, mustardy stuff. It's much easier to digest written. Hence the fact that having the VIP group is an extra value, because we have a whole section just covering this stuff and to get ready for what's going on. And now we even include Japan's monetary policy. We got their eye on them because of the carry trade. That kind of, even for a channel who focuses on monetary policy, we were always looking in the United States. We didn't even realize about Japan. But you got to adapt, and you got to adapt on the fly. So there's all this information that will go into the Fed's decision. And the KII stimulating exactly on track with our thesis for why it would be time to short Kaspa. The KII's now been rolling out the Kaspa Academy, and they're just putting cash into the hands of people to build on Kaspa, exactly like on the AVAX chart. Right now is when they're building all the Trader Joe's. So when Kaspa comes back and starts rallying, we get the 10 BPS at the exact same time. The federal government is planning on halting quantitative tightening. And this was in the FOMC minutes. They're like, yeah, we're getting ready to halt quantitative tightening either in Q1 of 2025, or we might have to delay it to May. And in my opinion, they just like to throw some shadows up, making it less of a buy the news, sell the rumor market. They have to keep everybody guessing, keep some money on the sidelines. That's why Powell's always saying it's data dependent. Because if he was just to go out there and say, yeah, we're cutting rates super hard, the amount of money that would be pigpiling in would be enormous, because that's what the investment banking class does. That's what we do inside our group. That's how we crush everything. That's how our 24-point checklist system works. When we dug up the gems, Spectral, Alex Becker pick, Desync, DEAI, and then other rate cut gems like Moonwell. A lot of it's about connecting it to monetary policy. looking into the technical analysis. Now, here's a huge factor. A lot of people look away from technical analysis. Who's that guy? Crypto Mindset. I actually checked out his VIP just to see what he was doing when he was constantly shorting Kaspa, trying to explain to him that there was no way in the flames of Hades that we were going to go below 10 cents. And of course, those guys were all trying to become the next Jesse AI, and they start shorting Kaspa. We were shorting up here where you were supposed to short. And then these guys try to start shorting here, or that poor kid sold his Kaspa like 48 hours before it shot to the upside, right? That guy that was buying into KRC20. If you use AI to help you out, you can get a very clear outlook on what's going on. So we built a lot of models for our group. You guys should have seen the emails I was getting in VIP during this, because every content creator was going, dude, this is it. Kaspa's gonna rocket to the upside. And all the guys were like, Jesse, this is it, dude. Kaspa's gonna rocket. And I'm just like, no, man, we are shorting it. It is on. And it all plays out eventually. So peer pressure is out there, and these kids that just got wrecked because they didn't understand this growth phase in Kaspa, it's really too bad because retail doesn't drive this car. So all the guys that were looking for some help, maybe checking their form, and that's good to do. I've done that. I was in Roaring Kitty's group. I've shown my GameStop purchase on many videos. I was in GameStop 90 days before the rocket. I've chatted, had multiple conversations with Roaring Kitty. And of course, this bond connection was all part of that as well, along with the short squeeze. Technical analysis is very important. And a lot of us want to look away from it. And the reason is we're not able to connect it to fundamentals. Crypto Mindset, he'll just try to draw a triangle and have no fundamentals for what that triangle represents. He's close, but close is not good enough. In order to get it right, when we see even a pennant like this, just a 7-day ascending triangle, and now we're able to make the connection, oh, the FOMC minutes are coming out in 48 hours. This is going to break to the upside, and because it's a pennant, it's going to be less of a break. Or looking at the total 3, and here's a kind of an intro into these repeating trend lines. You see this yellow and purple falling wedge? Exact same 2 falling wedges. And we've been using them the entire time. This was the last time the FOMC was cutting rates, all the way down here to the tip toe. This was their last rate cut. Altcoin Daily, Crypto Banter, they thought this was a signal to go long.
Riggedy, wrecked, son!
We were shorting AVAX particularly there, and then meanwhile, observed Kaspa was holding strong and saw that as a massive signal. It was connected to the bond market, and we became very interested and went all in on Kaspa very early. Now, since then, this exact wedge has been repeating, and like we just showed on the Solana, Render, AVAX charts, it's the exact same wedge. So we were able to get this swing trade because we knew the fundamentals and we knew it was going to break up. The reason why this was showing downside was the exact same reason as this. It's FOMC monetary policy. The Fed was supposed to be cutting rates here. They delayed. And then, like they always do, the government stepped in and kicked crypto when it was down. And this is when they attacked Binance. This is what they always do. Central banks start raising rates and they stopped quantitative easing. Remember that monopoly game we were talking about? Boom. Then the government decides they're going to make sure that retail investors are safe. And they open the Gary Gensler fiasco right here. So these guys are working hand in hand like always. And now they are working on the flip side. We've got JD Vance. He's the guy. He drafted the bill to get Gary Gensler fired, to make the Commodities Commission in charge of crypto. Yeah, Moonwell's good to go still. Absolutely. It's offering competition on money levels because it provides a yield. So as the rate cut continues, it's not just the investment banking class that can buy bonds. Rich guys can buy it too. And so they'll be interested in, to protect their cash from inflation, use assets and services like Moonwell for staking. So the falling wedge, like we just covered, average upside 150 to 250%. So this is 770. We've got a huge breakout ahead of us just from this downside and this one too. So these are just poised to just continue monster growth. But anyway, back on track. We were connecting fundamentals here to the technical analysis, which is what we've got to do with Kaspa. We're not always so fortunate that there's a clear cut, like inverse head and shoulders like there was here. Or back in the day, there was that very clear cut cup and handle with an ascending triangle for the handle. Those are easy patterns. Anybody can grab those. We're getting into more of the repeating trend line system. So just like on the total 3, how those two wedges were the exact same, the yellow and the purple, we can see these trend lines repeating on Kaspa. And right now we're at a very important trend line. This original breakout where Kaspa went from 1/10 of a penny to 1 cent, the angle of this trend line, we had cloned this and we were using it to try to find a repetition of it, knowing that the halving and emission schedules create repeating trend lines in crypto. So we're looking, and we see this symmetrical triangle here. The Fed's raising rates, so we know that symmetrical triangle is going to break to the downside. And we can see here, symmetrical triangle, yeah, it's like a 50-50 toss-up to which way it's going to go. We do find it starts making support here. And this cues us that the rock bottom resistance has been made. Now, fast forward, we can see that original y-axis using the angled Fibonacci pitch. We had this exact setup, and this is spooky how good this is. This exact setup was all over our channel in our original Kaspa videos, aligning the golden pocket up with all these levels. The breakout happens right after FOMC meeting. We tell everybody, we had like 2,000 subscribers. We were like, dude, do a 10x leverage trade on Kaspa right now. It's going to rocket, right? The cup and handle, the ascending triangle, and then the FOMC meeting. 72 hours later, this God candle rips, and look it's that exact same y-axis acting as resistance now. And that OG line provided support here for the Bitcoin ETF, the shoulders of the head and shoulder, and here, definitely making contact. Zooming in, we're looking to get on top of that right now. So this is a very crucial level technically. And with the jobs data coming out, in the scenario that we get a weakening jobs market, we're looking to start getting closer to this very crucial 18 cents resistance. We're going to cut through 20 like a hot knife through butter. It looks like it was 20 cents holding us back here, when in fact, we've just shown you it's actually this repeating trend line acting as resistance right there. Psychological round numbers like 20 cents, just like on the Moonwell call out, we're able to identify that's a wrap for Moonwell at 10 cents. Get ready for downside. 20 cents, similar effect. But this time, it won't have a y-axis support. So we're going to get right through 20 and then back up to challenge this y-axis. With quantitative tightening ceased, all the upgrades and this load of cash that would have previously been stimulating Kaspa's upside, just like on the AVAX chart, has now been getting used to grow the Kaspa ecosystem. So we're already ready to go. We've got the KRC 20 means. That's the tip of the iceberg. They need all kinds of DEXs and swaps and stakings and NFTs. They need the whole basket. As well as they can do AI and GameFi. Looking at the KII website, one of the original board members built the video game called Far Cry. He's not on the board anymore, but it just shows how much Kaspa can do. And with the 10 BPS upgrade, we get ever so closer. And it's going to take off with or without retail. It doesn't matter. We're not trying to pump Kaspa. The market cap is so big, everybody who's watching all Kaspa on YouTube can't really even move it that much. It's the institutional level investors that have already charted out.
Sun Tzu,
Kaspa's the winner, man.
Every battle is won.
BlackRock, Marathon Digital. These guys are so entrenched in Kaspa. They're protecting themselves with the gamma support from Binance futures. Doesn't that seem a little bit strange? Binance has futures. They did the same thing on Bitcoin. First, they seed funded it here. Then all of a sudden, in the midst of Gary Gensler's regulation festival, oh, here we go. Coinbase now letting you degenerately do 100x Bitcoin or however big their futures are. And this just creates a gamma squeeze, protecting the big dogs. Kaspa has this protection, and that's very rare to see. The big dogs with that level of interest. Fundamentals and technicals. So this upside rip, this is the one, baby. This is the one. Kind of like Rocky 3, like we're not going down again. This is it. Now, the Bank of Japan was very close. It looked like it was. Let's say the Bank of Japan didn't hike rates and the FOMC cut right there, we could have got the breakout. And then it would have rebalanced later. But monetary policy dictates everything. That was an FOMC meeting that did that, particularly in Japan. Yeah, Moonwell's a good project. You guys have all seen the Kaspa price projection model with Moonwell. Looking into other DeFi hits like, let's say, Aave. I can't spell that. The average market cap during the last peak for DeFi gems was somewhere between $2 billion and $7 billion on the high end. And that was last cycle. So we've got to factor in popularity and monetary policy. Here we go. So Aave, this was one of the leaders in the pack during the last cycle. This got up to a $7 billion market cap. The rest of projects that were similar to Moonwell's use case got about a $2 billion. So Moonwell, with ease, can hit $2 billion. Now we've got to adjust that for popularity of crypto and the amount of fiat money that's now in circulation, because the entire point of the quantitative easing cycle, they're going to keep printing money to go along with how fast the economy is growing. So there's more money, and I mean a lot more money, 60% more than there was during the last cycle. And that's all going to go into Moonwell with its own respected ratio. Just to prove a point on how important this quantitative stuff is, you can see this date right here from February of 2023 upward. It's right here. So they did a smidge, just a smidge of quantitative easing in February to stimulate the economy a bit, because why? Jobs. Jobs were looking bad. They needed to make sure they got those jobs on the street. And then look what happened. You got this huge uptick. So the reason why the December 6th meeting information on jobs is so important is because if we get lucky here and we get a bad jobs market, tons of liquidity. Who knows what the Fed will do? They'll cut rates. Maybe they'll do some quantitative easing. It'll go nuts. So yeah, Moonwell, 2 billion easy, plus adjustment for the quantitative factors. So we're looking at 3 billion. It's the playbook isn't mine. The playbook is in the FOMC. So the guy that we want to ask that question to, what I can show you is the price model. It's all up to this gentleman right here, Powell. He's the guy. He calls the shots. Whatever him and the FOMC board does, that's how it's going to happen. This is macroeconomic trends, something that we connect all of our trading plans to, how we've been able to crush the market. Not just the fact that, okay, well, they're adding liquidity, thus stocks go up. It goes deeper, like with the Moonwell call out. Meanwhile, the Kaspa short. You got to know the on-chain dynamics from the 24-point checklist system, which has led to numerous, not just, oh, nice catch, man. We're talking, these were the best swing trades you could make, hands down. You can sit around and study crypto for 48 hours straight and not learn one fact that's going to help you with actionable trading. This will aim you in the right direction. Definitely. The FOMC decides, yes, they're going to halt quantitative tightening in Q1. We get the Ethereum virtual machine smart contracts. The KII has been leaking information to this channel specifically to leak to you guys. You want to know why? Because one of the Kaspa team members was so enthralled by the repeating trendline system, they joined the VIP, checked us out. They were like, this guy's legit. He's our source. So we get this information from KII, but you got to take it from my word of mouth. They have two teams that are working on the Ethereum virtual machine right now. For you Kaspa OGs, you know Jonathan's trying to connect us to the native smart contracts, and that will be huge. Solana has 2 smart contracts. This is going to allow Kaspa to do way more on chain, including gaming and AI. It's going to just open the doors for insane growth, like pop. One of the massive theories that's connecting Kaspa to the institutional level investors is these are the guys that actually own all the USTD. Let's bring up DeFi Llama because this will explain more of what's going on here. So it's not controversial to popular belief. Coinbase and Binance don't actually own the coins on their exchange. The big dogs do. The market makers. If Coinbase owned all the crypto on their exchange, the market cap would be through the roof. Just as a quick way that you can just double check that in your head. They deal the business to these guys. These are the guys that buy Kaspa and every other coin, from Brett to Toad to Diddy Party. With every coin they own, they need to have some USDT because you got to swap it. You're providing liquidity. The majority of their business is done on Ethereum. Let's say we're at a boardroom right now. We don't want to do this as our business model. It's not cost effective. It's slow. It gets jammed up. It isn't scalable. They can't take this out of Nerdville, which is where we are. We're so early. We're these basement dwelling weirdos. Once this goes mainstream, it can't handle the pressure. It'll collapse. It'll completely fritz out. It'll be a done deal. You couldn't even go mainstream, right? Like, let's say you were to go, okay, we're not going to do Visa on Visa. We're going to do Visa on Ethereum. The network would jam up. It'd cost $1,000 to move $10. This is all test run for Kaspa, which is the next level. It's the Pentium chip. So they've been trying on Rust. On Rust, mind you, step 3 of the 24-point checklist, find out what code your project is, go into the GitHub page, use AI to translate what's happening there so you can understand it just like it was a warehouse making chairs. You know how to build a chair. You can see how hard they're working. With AI, you can look into the GitHub and see what's going on. How many chairs are they making? Are they working hard, etc. So they've been test running Solana, and for a while, the stable coins were up to like 60 billion. And what happened? Solana crashed. Solana failed. Meanwhile, Solana's market cap has doubled. This was our last trading plans for Solana, right around the 130 range. Market cap's almost doubled. Price hasn't created a new local high yet because it's so inflationary. This is signs of a chain that's on its way out the door. It served its use case. What's its use case? There are so many tools and applications, not just for us retail to use, but for the developers. They need all these special devices to help them build on chain in the coding language. They've already got it all set up, so they can just migrate that right over to Kaspa. They can rebrand apps that are already up and running. And just boom, now they're on Kaspa. So they've already got this already lined up. So the growth will be absolutely explosive. Ripping to the upside. It can happen so fast. And because just like with that AVAX chart, they've already started building the Trader Joe stuff. This is what they were just doing right here. Diverting cash off chain into growing the ecosystem, just like KII's been talking about they're doing. That's what's happening on Kaspa. So, we get at least the Ethereum virtual machine smart contracts. This ecosystem explodes to the upside. The FOMC, just like we went over with the quantitative easing right here. They go from a pause in quantitative tightening to now all of a sudden, we're going to go ahead and do quantitative easing. This is February 20th, 2020, 1 year later. This is on the stock market too. Everything rips to the upside. Boom. The 1 year treasury bond is the Fed's #1 holding. So they stopped providing high yield on it. This is the 2 year bond. Very similar chart. They stopped providing these big payouts. All of a sudden, BlackRock and all the big dogs, they're now investing on chain because they got to protect their money from inflation. historically, these are like your top 30 type projects from the last cycle. So Bitcoin hits 1 trillion. This time Bitcoin's going to 150K. What these guys will get is anywhere between 10% and on the low end 2% of Bitcoin. So Bitcoin at 150,000 means worst case scenario, we're talking like Litecoin, Matic, Kaspa's getting a 60, 70 billion dollar market cap. All the way up to the ADA, the XRPs, where they're getting closer to 10% of that 3 trillion. And this is the getting ready to go. Speaking of technical analysis, this is a giant broadening wedge. There's a giant broadening wedge pattern getting ready to break out right now. With the gamma support level at 10, the broadening wedge average upside, I got the printout right here, 100% in price action. So we're going from 25 to 50. And now the bull run's going to kick off. Even people that don't use monetary policy to establish when everything's going to peak are saying November of 2025. When we start incorporating Satoshi's secret in monetary policy, because the FOMC delayed rate cuts compared to the halving, it looks like this peak will happen later. And just to underline that a bit more, I'll show you Tesla. See that? Tesla doesn't have a halving. So how come Tesla did a rocket ship the exact same time Bitcoin did? It's because it's all going back to the FOMC quantitative easing. This is what you got to start to study to take it up to the next level. You guys will crush it. We've been destroying the market. There's no one that can compare to us. We already know that because our swing trades are like the best one possible. Like there's nothing else you could have possibly got would have beaten it. And it's all from an understanding of this. And this will pay, the more time you put into researching this, will pay dividends when it's time to sell. Right? Yeah, regarding meme coins, I don't trade meme coins because I have full confidence in the gem hunting ability, being able to identify the projects that are going to absolutely rocket and provide the most gains, and to be able to make actionable trades based on this. Like the AVAX short that we did. Up here, shorting AVAX at that FOMC meeting, May 3rd, that weekend, we entered a leverage trade short on AVAX, and look what happened. We got this beautiful red candle as State Street and Jane Street sold all their Robinhood holdings. Meanwhile, Kaspa was beefing up simultaneously, and perhaps what allowed me to get such a good insight into Kaspa early was because I was short on AVAX, because I noticed my short sale was going way up. I was looking at the rest of the market, had one eyeball on Kaspa, and I realized, yo, Kaspa was actually picking up, which showed me these investment bankers that just dumped all of their legacy crypto on Robinhood. They're picking up Kaspa, which meant that all the talk was true right here. Great short sale. And then we went into Kaspa long. I'll show you guys my original bag. This is the first double up. So this is just under 4 cents. We got it, loaded it up, went all in under 2 cents. This right now is worth almost $250,000 at 66 cents. It's $1 million worth of Kaspa, starting with $10,000. So these are the actionable trades that rocket. And now our other bags to rip, Spectral. This is a runaway train, in my opinion, that's going to just go completely goofy. Like the next Tau. Let's look at the Tau call out, because Tau's a flagship, very important artificial intelligence project. Also works very well with the repeating trendline system, almost to a spooky level of accuracy. So what we're seeing, and we saw this in a lot of the symmetrical triangles, was there's actually two head and shoulders here. You see this head and shoulders? Each one of these will, looking at the printout, head and shoulders is going to do a 70% downside. This does a 70%, and then this does a 70%. And so we're saying, okay, we're about to get a break off here in Tau. And this breakout in Tau is what's been spewing the upside for like Kubrick, all the AI projects, DEAI, everything. So notice this angled Fibonacci pitch, because we're about to use this on Spectral. It's extremely helpful. We use this often on Kaspa. We set this secondary one up in VIP right here, September 20th. Bounces off the golden pocket, finds resistance here, breaks into the gray zone, starts using that repeating trend line. This is because of the emission and halving schedules. Gets up here, finds more resistance, finally breaks out. The emission and halving schedules create these repeating anomaly phenomenons. Now, all we did to create that angled Fibonacci pitch was we cloned this one. We just clicked on it, said cut, copy, paste, and popped it over here. Look at this. Downside. It fits in like a glove all throughout these wiggles down here. Downside, and then this massive x-axis repeating downtrend. This is a wick-off breakout. And we see similar stuff on Kaspa. Remember the y-axis we just talked about? Then you got your x-axis downtrends. Repeating. Once we identify these repeating trend lines, we'll be able to get a higher level of understanding with our technical analysis, almost spooky level callouts. So on Spectral, we recognize this symmetrical triangle here. And we can even see it was acting as resistance and it flipped into support. You'll see that often with any strong resistance. We can see other variations of it, resistance flipping into support here. See that? We're going to get an angled Fibonacci channel, and we're going to pull this down here. Okay, look, we can line it all up. So we're getting a lot of bounce off this golden pocket level. See, bounce, bounce, bounce. Our recent call out on Spectral from just the other day, right here in this golden thing. And admittedly, we did not report this as a swing trade. We just said this was a hodl. This would be the low, and to get it, because we did not recognize it was about to rocket for the same exact reason Moonwell did. And it completely rockets. We got faked out actually here too from statistics. Another indicator that we can use to get massive insight. See the one-day statistics? Every single time it's low, hit buy. Really, really difficult technical analysis, right? Boom, it's low, you hit buy. Boom, it's low, you hit buy. It's not rocket science. Although there are variations of how to use this indicator. This is a newer listing, so there's less fingers on the scale influencing momentum. Later, it'll become more complex. And we did the exact same thing with Tau. And that recent breakout. This, where did it even go? Is that it? No. Spectral is positioned to become a runaway train. That project can start going completely goofy. See, remember this buy it low indicator? It's still not even at the top of the meter yet. So it's showing us more upside is coming. And when we're looking at these repeating trend lines, we can see, yeah, this one, we're not getting headway until that psychological level of around the 20th. Now, of course, we have a 24-point checklist, which it shows how bullish we think that this project is when you got a guy that spends enough time to write you a 9-page report going over every single strength and weakness of the project. We got this on Spectral, DEAI, which was another leading swing trade, and desync. All of those crushing. All of our guys that went for 24-point checklist projects are seeing ridiculous gains. And more importantly, in my opinion, have a much deeper understanding of, a lot of people know on-chain stuff, maybe even better than me. A great example of this is Kaspa Silver, knows so much of this on-chain data. I used to talk with him because back in the day, we were the only guys talking about Kaspa. And I would be ragging on the content creators who didn't understand TA, even if they were bullish on Kaspa. And he was like, dude, don't do that. We want these guys on our team. And I was trying to explain to him, being the oldest guy that's creating content in the community, it's hard to get successful people to sit around and make videos. That's why you get this whole slur of Peach Fuzz Mafia guys creating goofy content. I explained to him, dude, we don't want these guys making content. They suck. And what they're going to do is what they just did, which is walk the entire community off a cliff. So, Kaspa Silver, love your content. Great stuff. But in terms of the argument, no, we wanted to shut those guys down, not boost them up. So everybody got in on desync. We got a huge report on this. I'm actually really regretting not buying this a lot, actually. This is one of the 24-point gems I did not buy because it's Alex Becker. I don't know. Maybe that was a bad decision. But the guys who got it, and they were talking about this in Discord, they're like, yeah, this one's good. Let's get this one. So I know a lot of people pulled the trigger on that. This is another one. MEXC listing does nothing. Gate.io listing does nothing. Rate cuts sends it rocketing to the upside. These are lagging indicators. What's going to be way more important than KRC20 is going to be what the FOMC does, particularly this jobs data. Now, who knows? The jobs data might come out and might not rocket Kaspa, but we're right around the corner from the next FOMC meeting and from the quantitative tightening coming to a halt. This is going to start triggering Kaspa to move up. But based on looking into this really nerdy stuff like part-time wage growth and the amount of workers that the government hired to influence these numbers, I'm pretty sure that we're going to get bad jobs, and that will be so good. So good. Now, what you want to start studying in all of this stuff during the bull run is inflation, warehouse supply numbers, and you want to figure out when the Fed's going to end it. Like here, this was an FOMC meeting on November 3rd. They stopped quantitative easing, and they started raising rates. Like on this chart, they start raising rates. And then they start messing with the quantitative easing thing. This causes downside. Pretty soon, the government steps in, starts regulating. Right now, they're going the exact opposite. The government and the central banks are creating a monster bull run. This is going to be a legendary market, and Kaspa is positioned to totally steal the show. This has massive X factor connecting it, which is the KII. Without the KII, we couldn't be as bullish as we are on Kaspa. These guys are doing so much, and these guys are enormous ballers of the highest accountability money-wise. You want to talk about a dude that's rich? This dude is rich. He's the guy that hangs out with the prince of oil in the Middle East, those type of guys. He's their dude. He works for them. He works for them. And now he's working for us. So this is the guy you want. You want to win? Roll with winners. Kaspa rolling with the winners, not to mention BlackRock. So we've got BlackRock, Marathon Digital, State Street, and this dude who's a straight up baller of the highest caliber. He invented the European trading market. Nice one, Trish. Congratulations. Yeah, if you guys need a Tangem wallet, and now's a great time to get backup wallets if you've got, let's say, $250,000, 500,000 Kaspa. Think about how much that's going to be worth during the bull market. Maybe you want to spread it out a little bit. It's $60. Not only is this like a super valuable baseball card that you've got 3 copies of, you might want to go ahead and just spread it out more. Thinking about, well, what if this is worth $5 a piece? I'm going to have $1 million baseball card. You don't need any of that action, right? We don't need that action in our life. Spread it out. Dude, I've got so many wallets of every kind. Tangem, easiest to use. You use code. Use code JesseAI. You not only get a discount, you become an affiliate marketer. So you're going to hook up your friends and your family who are about to start getting interested in crypto if they're not already. You can help them out, help them load a bag right now. And all they need is the Tangem card. It's very easy. You can help them set it up over the phone. They can't mess it up. They don't even need to write down a seed phrase. They got the RFID if they want to do it like that. Welcome, Las Vegas resident. I've actually gotten the privilege of going to Sin City Crypto. They have a beautiful, fully operational studio where the Kaspa team goes and talks sometimes. They actually were fortunate or generous enough to help me set up this live stream studio. One of the guys was. So very cool to have a Vegas crypto community. And the reason why you're getting a whole new spin on the ball here that you don't see in any other channels is because I was part of Roaring Kitty's group. I was in the GameStop Wall Street Bets car. I was in on the GameStop rocket ship. So being in contact with a guy like Roaring Kitty gives you such an elevated level of insight. This guy worked as a stockbroker type of entity, and he went to college for this whole bond market entity, Satoshi secret, we'll call it. How Bitcoin's woven into the global liquidity cycle, the halving and the rate cuts, the halving and the rate cuts. Looking at GameStop, that buy order was from January 13th. We were in 90 days before, just getting ready for this massive rocket ship. Exact same date, almost 30 days apart from the Bitcoin run up, from the beginning of altcoins. It's all interconnected. And it was very easy having contact with someone as educated as Roaring Kitty. And this isn't like cloak and dagger stuff, you guys. It's all over television. You can turn on any channel and this guy's on there and they're talking about the most boring, above the shoulders, mustardy stuff like Oh, yeah. The repo numbers are now 2.5, exactly 1/8 more than expectations from last year. We're very data dependent. They're going to do their whole spiel and nobody watches it. But what they're telling you is what's going to go up and what's going to go down. Because as soon as this information comes out, these guys get their own 24-point report. They have guys in MIT who are putting together the same type of information that we are. And what are they saying? Buy Moonwell, right? Buy Spectral, buy DEAI, because of this shift, connecting the on-chain data to the monetary policy. So there's still time to load our bags as this happens, but this is a skill set that you want to learn when it comes time to sell. Good question. It's gonna, in the scenario where the FOMC flips into quantitative easing, the bull run will end when they halt quantitative easing. That's exactly what happened last time. In the scenario where they just keep quantitative easing neutral, the massive signal will be the Fed will start hiking rates, which they did parallel with the FOMC. And there's a lot more detailed analysis that you can get into that, tracking the bond auctions, like something that we've had some success with doing inside VIP. These spikes here, August 26th, September 29th, and then here again, these were the final rounds of bond auctions. So while the government's still offering high yield, this is showing how much yield they're offering. And as they cut rates, this number is going to be affected. We're actually going in and like doing accounting, like pulling up how much are the bonds they're selling, 80 billion of 1-year treasury and all that stuff, connecting it to the total 3 chart. So for the total 3, it'll be a walk in the park to mark when the top on that was going to be, but correlating it to on-chain data, it's going to take a little more finesse. And we're a bit far away from that to even start making a realistic drawing of incorporating it to on-chain data. But we can know those 2 signals broad-based right now. Because the FOMC delayed the rate cut, this was the last rate cut cycle, and then this was the halving. This time it came halving first and then rate cut cycle. Instead of the rule of thumb that a lot of people will go by, it's 550 days after the Bitcoin halving. That's when the peak will take place. We kind of debunk that when we look at the Tesla chart, when we look at the GameStop chart, because those peaked at the same time Bitcoin did. And it's much more connecting it to this stuff. It'll be delayed by a few months. So we're talking more December, January, pushed back a bit. Around the end of the year is people get ready to take profit, stuff like that. The big players, the institutional levels. There's the January effect, things in that nature. This bull market will be more connected to that end of the year action, end of the year, start of the new one, then November, October. It'll get pushed back later, which gives us more time. But we'll know more as it unfolds. Excellent. All right, guys. So pretty big catalyst coming up on December 6th. We're looking for the jobs data to be down and out. Hopefully we'll get that. And this will be the start of the catalysts that are getting ready to drive Kaspa up. The next being the December 17th FOMC meeting. And then after that, we're getting quantitative tightening will halt. simultaneously, 10 BPS upgrade, and all of this on-chain action. That's Satoshi's Secret 101. Just like every time there's rate cuts, there's a halving, Kaspa's doing the exact same thing in their own on-chain world. As the quantitative tightening is stopping, they're going to be upgrading on-chain significantly. And this is going to help out, and it's going to be monumental upside. So it goes on with or without you. These guys are driving the car, we're passengers. Kaspa has massive strategic partner strength with KII, BlackRock, and everybody, and is really ready to do some beautiful things. All right, guys, thanks for checking out this video. My apologies for the sound check. I'll make sure that I clear that up so it doesn't happen again. We will catch you on the next one.